Okay, perfect. Give everyone just another minute or two to come in. Okay, well, hello and welcome everyone to today's webinar. I imagine folks will continue to join us over the next couple of minutes, but just want to get us started with some introductions and housekeeping. My name's Valerie Pinkerton. I'm the TNFD and Transition Plan Lead at the Green Finance Institute, where I head up our market engagement in the UK for the TNFD. And today's webinar is hosted by the Green Finance Institute and the TNFD UK Consultation Group. And we're going to hear from three financial institutions in the UK. We hope it will help to break down how investors are using TNFD aligned metrics to inform their decisions, what they found challenging around using TNFD metrics, and what practical approaches they're taking to overcome these challenges and collecting and interpreting nature data. This discussion picks up on a paper we published earlier this year exploring those very topics across 5 sectors in the UK, and you can find that resource available on the GFI Hive site. And I'm really keen to jump into the discussion, but just a few points of housekeeping. You may wish to put Zoom into speaker mode for the best viewing experience. Today's webinar is being recorded, and the recording will be available on the GFI website shortly. Given the number of participants we're expecting today, we've disabled microphones, and we would encourage everyone to please submit questions through the Q&A function on the screen. So after the discussion, we'd love to have a nice Q&A session at the end. And then you'll also be able to see questions submitted by others and an upvote button next to each. So you can indicate that you'd also like that question to be answered. So if you see a question you like, please go ahead and click the upvote button. And with that, it's a great pleasure for me to introduce our speakers. We're really lucky to be joined by Rebecca English from Lloyds Banking Group, Yorgos Hadjilakos from M&G, and Ludovic Lenders from Impacts Asset Management. So thank you all so much for speaking to us. And maybe just to kick us off, Ludovic, maybe I'll start with you. I'd be really interested in understanding how you're trying to embed TNFD aligned metrics into your investment decisions.
Absolutely. And thanks, Valerie, for hosting us. Nature has been a key part of how we view and differentiate the economy in our investment process via what we call our sustainability lens framework at Impacts for many, many years. But really the big step change that we've seen in the past few years has been thanks to the emergence of not only the TNFD guidance, but also as a response to that, many of the data providers offering a wealth of nature-related data to investors. Now we're still in the exploratory phases, right? We don't have anything completely set in stone, as I think many others here sort of are in the same position. But if I had to group our and sort of bucket our approach so far into sort of making sense and synthesizing all of the great TNFD data out there, what we've done is sort of a three-pronged approach. We've broken down the metrics into the what, the where, and the how. So the what is really the first element, which is looking at metrics like PDF and MSA and other sector level data points that really tell you what are the key dependencies and impacts that companies have on nature. The where really answers the locate part, right? The first element of the LEAP framework is where does the company's assets interface with nature? So both on a map, but also based on different sort of geospatial layers like key biodiversity areas, water stressed areas, etc. And the how is sort of the final element of the puzzle. It's how is the company addressing those risks through its disclosure and through its policies, any targets that it's set on deforestation, and even ratings on sort of the quality of its biodiversity policies. And that sort of gives us a simple way really to view and assess the nature risk exposure by creating this sort of decision tree or funnel system that helps us identify which companies we need to look at in more detail, the way that data in practice is presented is very simply through dashboards or even integrated directly into our fundamental research tools. And in terms of how that's translated within our investment process, I think, we can all agree reporting is the easy part. We have the data there to meet that need. For stewardship, we found that this traffic light system, right, of seeing if it flags as, high risk in terms of the PDF, but also high risk in terms of location, and the company hasn't done anything to address that through its policies. We know that, sort of that gives us confidence of choosing, which companies we need to engage on more, but also going into the engagement call with the data to really arm us to tackle the issue at hand in a sort of as objective way as possible. And then finally, in terms of investments, we found sort of quite good success bringing in nature data where we've deemed it relevant based on the three-layer system. And it's a key component now of our fundamental research. So, for example, a company that flags high in water pollution, we want to make sure they've got good policies on water, and that no asset is flagging as high risk in terms of being close to a high stress water basin. So broadly, adoption is still in the embryonic stage. It's certainly not where, we want to be a few years down the line. We're still testing and learning as we go. But I think at least now we're sort of building up the muscle so that nature data isn't just an input to sustainability teams, but also to risk teams and the investment teams directly.
Oh, that's really helpful. And I think your reflections, especially on how you're using dashboards and this approach to prioritize your engagement and sort of additional data collection is really practical and helpful for others in the space. And we've spoken to other asset managers that I think are taking kind of a similar approach. Maybe Jorgis, building on that, I'm curious to hear how you're using some of these metrics and understand how M&G's approach might compare to impacts, and how it's sort of evolved over time.
Yeah, thanks for raising Valerie, and thanks for having me. George Hatzilakos, Climate and Nature Model Lead. So as I focus on translating emerging nature metrics into practical investment decisions, I'll try to give you my lens from an asset management perspective. I think maybe if we make a step back, we tend to approach nature metrics as something new, novel. But for many of the sectors that we operate, it's actually old news. If you think mining, agriculture, utilities, those type of analysis where there is environmental related materiality and operational risk have been taken into consideration for years, if not decades. So I think it's good for us to have that um, in mind when we approach that problem. Undoubtedly, the recent work by TNFD has helped us progress this, give us more structure, comparability, visibility of those risks. And I think, Ludovic, you mentioned this in terms of your traffic light system. So how do we use our metrics? Answer your question. Three practical levels: portfolio awareness and exposure mapping. Secondly, company level risk assessment. So
Mm.
how we actually assess a particular issue or an asset. And the last, which is the most challenging of all, is integration that into valuation, into credit analysis, and then materiality chain. So I think in terms of portfolio awareness and exposure mapping is not too dissimilar to what Ludovic described, and often relating to external disclosures, because it often operates across a portfolio. It takes to have a methodology that applies across your book. Um, it helps prioritize where you might want to go deeper, right? So I think probably many of our audience have got in their minds outputs or similar tools that they use to do that. Now, when you go to company level risk assessment, that's where some of the magic starts to happen, because hopefully some of the analysis starts to become relevant for people who are able to do investment decisions, and uncover areas where previously they might have been unaware. For instance, water stress that the company might be exposed, either in terms of operations or supply chain, biodiversity sensitivity areas, land use exposure. So I think that level of analysis where we can leverage metrics that have increasingly been made available over the last few years permits us to systematically answer the question, um, is company X able to operate with limited exposure to biodiversity risk? Or conversely, if it does have biodiversity risk, where does it manifest itself? Is it a particular commodity in its supply chain, or could it be risk? Now, when it comes to integration to valuation credit analysis, I think that's more of a case by case and asset class by asset class. One example is sovereign risk. I think that's very difficult and probably very challenging for someone to conceptualize unless we're talking about a very specific um, sovereign risk, which we can immediately think of nature-related risks. But typically, if you have U.S. credit, UK gilts, that's very remote. The nature component, so integration is very challenging. But I think for specific sectors, that is pretty much mature and able to incorporate it, especially when it translates to operation risk, capex, to alleviate and increase resilience from nature-related risks. So that aspect is definitely the most interesting, where I think the cold phase of analysis is happening, and I would see the most evolution over the next few years.
Oh, really exciting. Thanks so much, Jurgis. Well, I think the TNFD guidance absolutely encourages using metrics where they're going to have capture those material issues and be decision useful. So it's good to hear how you're both thinking about that in their application. Maybe Rebecca, I'd be interested to bring you in and hear how this translates into a banking context and some of your client-facing work.
Absolutely. So that materiality lens really resonates with us, and that's kind of the angle that we've taken in identifying where do we want to start, what sectors are we going to look at first. And so that led us to start looking at our agricultural and commercial real estate portfolios. And we found the TNFD metrics and the TNFD LEAP approach particularly valuable in identifying and understanding how we can support our clients. So kind of yes, thinking about risks, but also what's that opportunity lens. And so we're assessing how our clients are interacting with sensitive locations, interacting with nature more broadly, and so accompanying this with our analysis of their impacts and dependencies on nature for those two portfolios that I mentioned, so agriculture and commercial real estate. So we're looking at geospatial data, environmental data, considering what data is publicly available. So you get data like land and crop classifications, for example, to think about where we may have clients operating in areas with elevated nature-related risk, but also opportunities, such as those kind of with higher water risk or areas of biodiversity that I think have been mentioned. And so we're already starting to see through this analysis kind of at a portfolio level for our farming clients. I think it's around 60% of our pilot sample in protected areas, and similarly kind of a not inconsequential amount of our commercial real estate clients as well. And so it's really starting to open our eyes and kind of thinking about things slightly differently about where our clients are operating. But to focus on agriculture, we're using our LEAP assessments to inform how we think about resilience in particular. So it was great to hear that mentioned already, particularly through the lens of regenerative farming practices. So the analysis that we've done through LEAP highlights both the dependencies and impacts that our clients may have on nature. So we've used kind of available data and proxies to assess pressures such as fertilizer use and water demand, but also understand how farmers might be relying on different ecosystem services like soil health, water supply, pollination, depending on kind of farm type, where they're operating, things like that. And so what we've been able to do is highlight different geographic areas where we think particular regenerative practices such as cover cropping, tree planting, water management are likely to deliver strong environmental benefits. And we're feeding this directly into our product development. So we're trying to design different financing solutions to support our clients to transition into more sustainable and resilient models. And so we've got a growing evidence base kind of through the LEAP approach, but also through research into farming practices that support both economic and environmental outcomes. And so this has reinforced the message that farmers often require that targeted financial support upfront to help with those costs and that risk of transition to them. And so we're already seeing this kind of flow through to a practical response. So we've developed our agricultural transition finance product, which we're hoping addresses kind of some of those impacts and dependencies that we found through our LEAP assessments and supports the adoption of different regenerative practices, targeting some of those key impacts and dependencies on nature. So as much as we are thinking about nature and metrics through the risk lens, we're also really trying to see how can we better support our clients through the transition. So yeah.
It's really interesting to hear how the analysis informed that new product development piece, and to your point, an opportunity both for the bank's business, but then really an impactful solution for clients while they're navigating their own transitions. So these were all very positive insights. I'd love to hear a little bit about what can be difficult about applying some of these metrics in practice. So maybe, Jorgis, I'll come to you first on this one. Would be interested to hear what you see as the main challenges.
Thanks, Valerie. And I guess most of the audience would like to hear me say that there are not enough data or we don't have enough models. I think it's probably the opposite. There is a lot of noise from so much data, so much different information. And I find from when I speak to institutional clients on the topic that they find it as quite challenging for them to find a signal given the plethora of available data points. So I think the name of the game is fit for purpose data. So different decisions require different types of data by asset class, time horizon, use case. So the challenge is not availability, but matching that data to the decision. So keeping an eye on that. And I guess when you're sitting at different positions in an organization, and back to what Ludovic was saying about the different purposes from stewardship to disclosures, we need to have that in mind because there are some magic metrics, for instance, some of them used in continental Europe that aggregate all of biodiversity risk in one single metric, and that has value for some purposes. And that if I'm trying to inform an investment decision, that probably is less strong because I cannot relate it back to a materiality and a specific biodiversity risk. So I think that's one, keeping that fitness for purpose data. The second aspect to consider is gaps in the underlying system view. So particularly around supply chains. I think it's fair to say that we have got, unlike, say, climate transition risk, where it manifests itself in a similar homogeneous way across a sector, like utilities. When it comes down to nature, it's very highly localized at a specific region, at a specific sector, sometimes in even asset class, a specific time horizon. Sometimes time horizon could even be segregated to a season, right? So when we're starting to think about that, the necessity for us to apply that consideration on supply chain is necessary. And I think that lack of understanding of that matrix and the nexus of supply chain with nature risk is something that is lacking. And it has nothing to do with nature data. It has to do with our financial flows. And it will actually help inform a number of other sustainable related decisions if we're able to better link supply data, I think, from anything regarding to climate, nature, and other limitations we might apply to a sustainable fund. Lastly, I think translating metrics into financial materiality. So even if we have the best data, in many cases we do, there is still judgment involved in connecting biodiversity, such as a water metric, to cash flows, costs, and risk premia. And I think that challenge is shared also with people who are involved into physical climate risk. It's not too dissimilar. So that translation step remains inconsistent across the industry. It's doable, but if I want to consider what I'm doing with what Becca is doing and what Ludovic is doing, most likely it's going to be difficult for us to consider it in the same basis. And we can make a reflection on climate. You know that famous ITR, implied temperature rise metric there, where there is so much debate about how do we go about to quantify it. But at least we have a basis of starting point like CO2 equivalent. In nature, we have got the same problem, but with orders of magnitude of more complexity. So I think that translation of metric into financial materiality to help financial analysts embed this into it is where I think it's a challenge. So how do we navigate this? I think we prioritize use case clarity. We should combine top-down signals with bottom-up analysis. And finally, focus on building internal frameworks. So we have at least consistency within an organization of how we translate nature matrix into financial terms.
It's really interesting. And I think it's an important shift in the conversation from, to your point, this usual focus on data scarcity to this thing about data depth and usability. And in some cases, helping to build out the context that makes the nature data we already have access to decision useful in an investment framework. Maybe curious, Rebecca, how that compares to your experience on the banking side.
I would absolutely agree. It's not just around data being available, and I think there is definitely enough for us all to start getting started on, which is the good news. But we do still find there are some practical challenges. So things like around how we're able to locate clients and identify which are the best and most suitable data sets, and what tools do we need to help us understand impacts and dependencies. And so one of the biggest challenges perhaps that we found is fundamentally understanding that first step of like, well, where are they located and how do they interact with nature? And this is something that we're continuing to build our internal capacity on. And so something we found value in working with external providers and partners to help build up that kind of capacity building and knowledge as we go, and to provide that support in nature-related assessments. And so when we're thinking about this, for us, it's important that we consider the data that we already hold. And so that includes information on where clients operate, but also kind of what other environmental data do we hold on our clients through existing processes. And some of those may have been those established for climate. Some of those may be kind of processes that we've expanded to encompass nature. So our kind of credit risk assessments now encompass nature, and we were able to gather information in those ways. But also considering, well, what gaps are we left with? And then what is that use case at that point of what are you actually needing to use this this data for, sorry, what decisions are we trying to make? What are we trying to inform? To then help us choose the right partners. And choosing those partners that have that sector specific expertise where you're taking materiality lens is also particularly important. But another challenge that we faced, and that I'm sure others will, is around being able to prioritize data sets that are appropriate for where you operate. So we were looking to, for our assessment, prioritize UK level data sets rather than solely relying on global data sets, which are those that we kind of often see referenced in guidance. We're quite fortunate in the UK that there is quite a wealth of freely available environmental data, so that's supported with our agricultural assessments. But there are complexities in understanding kind of, well, what is this data that's available at these different scales? What's the resolution? How frequently is updated? And how does this impact our understanding? And so we're working through kind of this to identify solutions that are most appropriate for, again, that mention of use cases. We found kind of at a UK level, thinking about farming, that there actually are quite a lot of freely available data sets that were helpful. So I mentioned before land and crop classifications. There's all these things around, for example, fertilizer application rates, data on kind of water quality, water availability across the UK. So when looking at external partners again, we considered kind of those that had a geospatial platform that could enable multiple data sources to be brought in and manage that complexity of the wide variety of data that we're trying to bring in at different scales and different frequency of updates, and combining those to be able to generate those decision useful outputs. We do still find there are some barriers once we've got this data, we've kind of figured out how we want to use this data, and actually channeling those kind of data related insights into action. And so something briefly to touch on is that importance of policy clarity. So long-term signals in policy are really important to help our clients make significant changes to support nature recovery, such as shifting land use practices, where we're able to kind of think about the longer term use cases and engagement of these data. And so we're really focused on ensuring that data is truly decision useful, both for us, for our clients, and then supporting that enable environment for making change happen.
It's really interesting. So I think what's coming out so clearly is context is key, and ensuring that the data that you're collecting is going to be appropriate for the individual use case that you're exploring. And then I think the availability of free publicly available data, certainly not in all geographies, but here in the UK, that we're quite fortunate to have that access in a lot of locations. Um, Curious, Ludovic, I know you're working from quite a different portfolio. Interested to understand how these challenges will play out from your perspective.
Absolutely. I can give a few sort of practical real world challenges that I've had in leading the work at Impacts at bringing in nature data. I'm certainly going to echo a lot of what's been said, and I'm totally with Yorgos on the point that right now there's a total smorgasbord of nature data that's just available, and you in a way that's also a challenge because how do you differentiate between MSCI, ISS, Iceberg, right? They all have these sort of black boxy models that are calculated in their own proprietary way. And it's almost like then you end up working with different versions of reality, right? If Yorgos is using MSCI and I'm using Iceberg, which are saying completely different things about a specific sector or a company, then it's just quite hard to really action that. And certainly, to echo that point earlier, it's you can't really go to an investment committee and tell them, listen, I think we should be acting upon this data if you yourself have no idea how that's been computed. And so I think this sort of standardization problem is still with us, but certainly not stopping us from acting. The second one, more practical, is around geolocation. We've been playing around with geolocation data for the past year, more or less, and using that to engage with companies. What we found is that in most cases, the data providers vastly underestimate the amount and the actual assets that companies will have. I just remember being on a call with a salmon company, and I was expecting them to tell us about their 30 or so fish farms, and the head of IR then started talking about 200 farms. So complete discrepancy between what the data is telling us and the actual reality because of that disclosure gap. And even then, when you do have information, say, on the location of an asset, you don't really know how material that asset is for the company. That's something really we're really struggling with because the company may have 800 assets spread all across the globe, but one of them is driving 80% of revenues. How do you decipher that across through the data? And that points to my final point, which again echoes Yorgos's point around materiality, which is all these different metrics, all these different approaches. It's hard to differentiate the signal from the noise. And so, how really do you go about picking out a metric that's going to be actually driving decisions? So for screening and reporting, it's great. The model data like PDF, like MSA, they can get you somewhere, right? But if you're really trying to influence an investment decision like a divestment or evaluation, you still need more work. And so that's why what we found at Impacts is despite all the progress with the data, there's still a big gap that needs to be filled through fundamental research. And that's an issue, right? Because that's very resource intensive, and it doesn't really scale easily, right? And just in the absence of good, completely sort of verifiable quantitative data, you just have to fill that gap with doing fundamental research. So just to end on the final sort of conclusion to that would be we're not going to get to a stage where we have the luxury of waiting for the perfect data to come up, right? Remote sensing is very exciting, but it's nowhere near where it has to be for us to be making actual investment decisions based on that. So that's why I would very much follow Becca's point around the need for policy and regulation, really, to get first companies to disclose data points that matter, but also to really signal to investors that there is really a will and a volition to put a price on externalities, and also valuing ecosystem services, right? Because if unless we get there, it's going to be easy for nature to remain quite easy to ignore for investors, especially those that generally don't have, say, an investment horizon of 10 or plus years.
Yeah, I think that's a great point that, these pieces will move together with evolutions in the policy context. You'll see changes in practices and behavior on the ground, and that can manifest in improvements in disclosure and access to data. So we're hoping we can see a rising tide raise all ships there. But wanted to draw out, I think, also that important point around having confidence intervals that are appropriate for the use case. So I know this is something that we saw in the at best business and biodiversity report that it may also be that not all decisions require that highly accurate result if they're directionally correct, but having clarity on sort of the level of accuracy of the data you're working for and being confident that it's suited to the decision that you're making. But really interesting, we're seeing kind of a combination of technical challenges like data precision and more systematic ones like policy and market incentives. It'd be great to talk through a bit more some of the practical approaches to these challenges and interpreting data that you've been finding effective and maybe what advice you might give to peers in similar situations. So Rebecca, I'll start with you. I'd love to hear a little bit more detail on some of the practical approaches and maybe advice you might give to other financial institutions.
Absolutely. So I think I would just emphasize taking a multifaceted approach to data. So we gather data through a range of approaches, as I've mentioned. So things like our ESG tool, and that includes sector-specific assessments there. Things like direct client engagement through our credible transition plan process, but we also work with partners in kind of specific sectors, so soil association to deepen kind of sector insights at a particular farm level. And we're continuing to expand our geospatial capabilities. So there's not really a one size fits all solution, and that's definitely coming through with the kind of messaging from Ludovic and Georgis as well. I think another kind of challenge and an opportunity is working on translating that nature-related data into those decision useful insights, but recognizing that may differ by team. So I work in a central sustainability team, and so I find it's really important for sustainability professionals to be able to take on that translation role and turn those nature related insights and metrics into something relevant for different business areas, but also something actionable for those areas. And so they are quite different skill sets in terms of kind of doing the analysis, interpreting analysis, and then translating the analysis, but all really equally important. And a big part of that is also understanding those synergies between nature and climate, but also some of those trade-offs, thinking about those growth opportunities, but also around managing risk. So no small task. And then I think just to kind of, we've talked a bit about policy, but just to say, even where that policy is uncertain, there is definitely, at least we see, a strong case for acting early and supporting resilience, supporting long-term growth, particularly as we kind of take that kind of client customer lens through our work.
Absolutely great. I think something we often say is even in an uncertain policy environment that might shape the context for impacts, dependencies aren't going anywhere. But just wanted to underscore, Becca, that translation piece of how important it is to take those nature metrics and really capture the commercial insights in a way that's going to be legible to other teams within the business. I think that's something we've come back to a few times, and it's really critical. Ludovic, maybe building on that, what guidance would you offer from an investment lens?
Yeah, I'll start on risk and then go on to opportunities, which is perhaps not talked about as much. On the risk side, my main piece of guidance there would be don't try to tackle nature all at once. Nature's super complex, and if you try to cover every single dependency, every impact, every ecosystem through every metric from day one, it quickly gets overwhelming and unmanageable. Our experience has been that if you're pragmatic and you tackle nature thematically, so taking one part of nature at once and then building the confidence from there, you eventually you'll be able to expand from that. So in practical terms, what we've done is we've basically settled on water as our very first subset of nature as our starting point. Water is measurable, disclosure is already common across many sectors. A lot of companies already pay for water, and it's one of the key ecosystem services that sectors as a whole depend on. And so a lot of our work, both on stock level risk research and stewardship priorities, has started with water, where the risks are, which companies are most exposed to those risks, and what specific ask we should be going into engagement meetings with. Once you've got that process going, you can then start expanding through other areas like pollution, land use, and deforestation, of course. But the important point for us has been really let's build the muscle on one thematic. Let's get really, confident in tackling nature issues one by one, and then we'll build across that, as the years go on. The second piece of advice on opportunities, that's an area where we at our core it impacts are very much focused on. But it's one where there's perhaps a bit less guidance from TNFD and other organizations, especially in the world of listed equities, right? Opportunities you think nature restoration, conservation, which is very hard to get exposure to in listed equities. So rather than waiting for the perfect framework or taxonomy to come out, we said, all right, let's start bottom up. Let's focus on the companies that we already invest in and see if those companies have any products or services that overlap or that help mitigate the drivers of biodiversity loss. So we're taking the IPBES framework for the 5 drivers of biodiversity loss, like climate change, pollution, changing land use, and overexploitation, and asking ourselves, which companies are offering which products that help alleviate those pressures. And that gives you like a practical way, really, of identifying nature-related solutions. Um, so just to give you an example, a company providing water treatment technologies helps address pollution. A company offering alternatives to omega-3s from fish is helping address overexploitation of marine ecosystems. And then you can look at the revenue exposure to the solutions and over time build your metrics and also any sort of put ex post metrics like outcome metrics that track the volumes of water treated. Avoided emissions are also a big part of that, but you can expand that to recycling, recycling and pollution reduction. So general advice, sort of start focused. Don't let the complexity of nature get in the way, and stick with pragmatism. Obviously, the data, the frameworks are still evolving, but there is more than enough to really get started in building risk tools, engagement priorities, and just as well as I was just mentioning, understanding where nature-related opportunities may sit in your portfolio, especially with AI now making sort of data collection analysis so much easier than it used to be.
Yeah, I'm so glad you emphasize the opportunities point because I think that's something we always want to draw out about TNFD, that the risk component is, of course, a critical element, but it really is a tool that can help businesses and investors identify new opportunities, new sources of competitive advantage. So it doesn't all need to be nature doom and gloom. Um, but Jorgis, I'll bring you in to close this section, interested in approaches that you're finding are working well to address some of these challenges and maybe your advice to peers.
Sure. Maybe I'll pick up on what you just said, opportunities. In nature, we don't have the same drive, if you may, from regulation and policy. And most likely we will not for the foreseeable future, at least at a global level. So unless we really tease out that opportunity, in my case, as an asset manager from an investment opportunity perspective, we stop being relevant. And it's just an aspect of disclosure, which doesn't really add a lot of value in the business. So I think we should keep close to that. And I definitely urge GFI, TNFD to give even more importance to the opportunity angle, as that can drive even more value add to the wider network of professionals listening in today. Now, answer your questions. Just to be brief, from my perspective, I think aligned to what Becca and Ludovic said, let's not treat nature as a separate framework and embed it into existing processes. There is an element of tiredness by internal stakeholders, especially when it comes to sustainability, where you introduce them yet another framework. It's not really anything completely different from an impact perspective, but it does have got different complexities we need to consider. Second, as I mentioned before, let's start with a decision, not the data. Let's be very clear on the use case, whether it's portfolio construction, credit risk, engagement, and select the metrics that generally decision useful. Third, let's invest on the translation layer. And I think, Ludovic, that's what you were mentioning before. Let's focus on one thing, not everything. So imagine if tomorrow you start or you continue your journey in nature, where you pick up a particular theme. Recently there are so many papers, for instance, on data centers and water. And you're able to translate the plethora of that knowledge into something which is decision useful for your team. I think that's a wonderful, very specific task, one biodiversity related metric, and very one sector, one time frame, but at least it is a start that it is decision useful, and it blends with all your existing frameworks. Lastly, to close, two additional points I'd emphasize. Let's leverage more the climate nature link. Sometimes we consider nature in isolation. In reality, it has a lot of in relation with climate, both in terms of maladaptation, but also in terms of physical climate risk and nature. If we can lean into industry alignment where possible, I think that would also give us a bit of tailwind. So convergence on taxonomies and approaches that will help scale capital to compare outcomes across portfolios, especially, Valerie, on those opportunities we mentioned before. So in short, embed, let's be use case driven, focus on translation, because then institutions that get those basics right can get more relatively quickly from even with imperfect data, but that permits them to get advantage comparing to everyone else who is just lost in the noise.
Uh, well, that's a great note for us to end on, some great advice for us to take forward. Um, I'm now going to open up for questions, and it looks like actually we've already had quite a few come in from participants. It sounds like there's interest in if we could have everybody share an example of a specific metric and the use case that it informed. So I know we've talked a couple of times about water is a key risk, but curious if everybody wants to reflect on a specific example of how they've used a metric. Maybe Jorgis, I'll come back to you.
Sure. So I guess it's trying to help the discussion become a bit more pragmatic. So I think from my perspective is trying to be very close to the nature metric. So to give you an example, water scarcity. So there are some information coming from WRI that gives you that information based on combination of satellite infos and aqueduct and other data sets. And we have got raw information straight off WRI. Then there are vendors which try to take this and give it a score, where there's a bit of a black box how that has come out. I very much prefer the raw information because that can relate exactly to the science, the nature-related science, and I can hence translate it to as close as possible to financial materiality where that exists, and hence identify impacts. Of course, the flaw of that plan is what Ludovic mentioned before. It's our ability to geocode our portfolio and intersect an area that some very good scientific team has drawn on a map with the locations of where we are. And hence we definitely need to recognize the flaw in the plan there. But it's not impossible for us when we're operating with information as a sector and country to have a good enough proxy of whether we don't have enough water in London by 2025, sorry, by 2035, or there is enough resilience in Athens by 2035, and compare those and try to help colleagues who are investing in water utilities identify winners and losers from that perspective. So that's potentially an example of how you can use raw data that some of it is actually freely available, by the way, to start informing a narrative for a particular sector of how that can be applied to drive decision useful information.
Really interesting. And I think that point of sometimes the value of working with a disaggregated data versus a prepackaged score is a very interesting one. Rebecca, I'd be interested to come to you to hear about maybe one or two specific metrics that you found were most relevant, especially in the agricultural work that you referenced.
Absolutely. So as I mentioned, we took our kind of leap insights and the data we gathered there to think about some of the opportunities for different regenerative practices. So just to explain that a little bit more, so in understanding how clients may be depending on nature for kind of soil health and nutrient balance within soils, or on kind of pest management, for example, we can then think about the types of actions that support this, or it may be that they are kind of dependent on, let's say, kind of pollination, and we can think about, okay, what are the different regenerative practices that can support providing these ecosystem services, increasing their resilience. So we were able to think about things like cover cropping and the benefits that they provide, look at our regional analysis of impacts and dependencies and thinking about, okay, there are some real opportunities. So we found, for example, cover cropping in East Anglia may be quite powerful, and reduced artificial nitrogen usage in Scotland and mob grazing in Wales. And all of this is being drawn from that understanding of impacts and dependencies. And then we have that product, our agricultural transition finance product, that can support the adoption of each of these practices that targets a different impact and dependency. So we very practically are able to kind of trace what we think may be the impacts and dependencies of our portfolio, where there are kind of regional opportunities for practices, regenerative practices that support kind of recovery of nature and resilient farming systems, and then how we as a bank can provide support to do so to farmers. So really working through that kind of those steps and using those metrics at the very beginning to drive impact.
Yeah, so it's a clear through line of some of those nature-related metrics, agricultural practices, up to direct processes and products that the bank can put in place. Ludovic, I'll come to you. Would be curious if there's a clear example in your mind of an individual metric that was particularly decision useful and what the use case looked like.
Yeah, well, I think I'm more or less in the same boat as Jorgis. Water has been given. We're sort of starting off a litany of engagements with companies in various sectors, mainly the semiconductor supply chain.
Mm.
Water has obviously been a key sort of our main focal point, and through that, specific metrics would be, of course, water usage, but also data on water pollutants and water discharges, which has been sort of data that perhaps wasn't available a few years ago, but now through TNFD, companies are getting up to speed with disclosing it. Of course, the adoption is remains very, very low, so we are having to rely on these modeled data sets. Um, but combining sort of factual company information around their water discharges with geolocation data. So WRI has great data sets on water river basins. And then finally, also having specific metrics tied to the quality of a company's water usage policies. And so having this sort of, again, it's a concrete example of that three pronged approach. We have three metrics informing the ultimate use case and asks.
Absolutely. And I think that's something we heard a lot in our conversations when we were developing the paper was the importance of finding a way to bring in the practices and risk mitigation that businesses were bringing online alongside the quantitative data that you had about risk exposure and being able to consider those together to really inform a decision. Ludovic, I might stay with you. We had a question that was around assessing the accuracy of proxies in decision making. So when you're using model data or making decisions around use of proxies, what does your process look like for kind of considering the credibility or which ones you would like to rely on?
Yeah, so that's it's a good question because it's one of the ones we were grappling with the most when we were a couple of years ago still assessing which data provider to onboard. Certainly, what really we wanted to make sure of is it was that as mu as much as possible, the data provider is bringing in external data, company reported data. So say you're trying to calculate a PDF, if you're merely or if your model is, say, unable to pick up, say that company X has introduced a policy, um, which means that 100% of its, say, dairy sourcing is organic, but the other one doesn't capture that, you're going to get wildly different results.
Mhm.
So that's the kind of sort of very nitpicky details that you have to go into if you really want to make sure that and assess really the strength of the data. Uh, and it sort of comes back to the point around why we need actually policy driving disclosure by companies. Right now, a lot of the companies that are disclosing the most tend to be the ones that are already doing quite well, right? Because they're
Mhm.
proud of what they're doing and they're not afraid to be open and transparent. But that of course creates a bias where you end up with most a company that will report nothing might seem sort of okay because you're merely using model data. That's the kind of challenge that you have to feel comfortable with.
It's really interesting. It reminds me, I had a manager in a previous role who would say we should be running towards complexity, that we want to be finding kind of those contextual factors. But another question we had that was upvoted, Rebecca, I actually wanted to come to you, is asking about quantifying the financial effects of ecosystem services. And I know you referenced pollination. I'm sure water quality and quantity regulation came up in some of your analysis. So I was curious if you had thoughts there.
Yeah, so I think for us, the kind of considering the benefits of these regenerative practices, we worked and did some additional research on top of our LEAP assessments. And so considering working with a partner to undertake this research, kind of what are different actions, how kind of complex are they to implement, but also what are the benefits, the real benefits through case studies from farmers on the ground in delivering them. And so we've kind of been leveraging those insights of the real farmer experiences of implementing these practices, of making these changes, understanding kind of where they benefit the environment, but also where they've benefited kind of farmers and their own economic resilience, and learning through that kind of what happens on the ground. To that point of there is value at some levels of that kind of portfolio level data, but there's also really importance in gathering data on the ground and engaging with people and looking at real world experiences as well. And kind of for us, it's a journey that we're still going on, I think is fair to say, for nature and kind of understanding that. But yeah, those valuable on the ground insights in helping us learn, understand, and support have been really important.
Really interesting. And that relationship piece, I think, is so critical that you're sort of taking some of these clients on the journey together. Um, a question that caught my eye in the list and I think came up in some of the conversation, Jorgis, in your remarks, is how do you combine both climate and biodiversity considerations? So curious to hear your perspective on how you're starting to look at these in an integrated way and maybe what kind of analysis you're finding is helpful there.
Sure. So I'll apply my mantra. We start by the decision. So if we are trying to influence, for instance, a research that informs valuation for, let's take an example like a mining sector, then that information requires understanding of how um, water dependent processes of mining operations could be stressed or otherwise. Um, Now, there is an interchange there because, for instance, when we're talking about water, we're thinking about water scarcity. In mining context, often this is water discharge, water quality. Uh, that aspect of um, comes to precipitation and increased precipitation in the context of resilience to be able to manage tailing dams. So in the example I just gave you, you need to have from one side data points that tell you if you have enough water. And on the other one, if climate change is actually driving changes in precipitation patterns, and hence the existing resilience of a particular mining site is inadequate, and they need to spend more capex to deal with it for the operation of that particular mine. So, giving a bit of a practical example, where when you're starting from a particular sector, a particular geography, uh, just looking at just the scarcity of water, you're answering almost half the question unless you combine it with having some understanding of what might happen from the physical climate change, which we typically put, the flooding aspect on a separate bucket, but in reality is part of the same problem, the same issue.
Absolutely. It's reflections we're hearing from businesses that we engage with and how they're thinking about supply chain. So even down to something like a seafood supply chain, how will changing water temperatures shape the price point and availability of stocks that are relevant for your business if you're a food retailer. So it's definitely an area that I think businesses are getting more sophisticated on. Um, there's one, maybe Jorgis, I'll come back to you and Ludovic, where there's questions on how are TNFD insights shaping your sector allocation or asset class preferences? So maybe a bit of how this is being shaped more broadly.
I think it's only fair that Ludovic goes first this time.
Very polite.
Thank you, Jorgis. Appreciate it. I I would say it's we're not yet at the stage where it's really I mean at Impacts I think we're different in that we through our sustainability lens we have always within our asset allocation at the very first start of any investment decision comes our assessment of risks and opportunities associated to various factors, of which natural capital is one of them. So it has always been a consideration within a multitude of different ones. We have used a lot of the TNFD data and metrics to inform and refine that framework. So we sort of conclude what that means is we have every sub-industry scored across their potential risk and opportunity exposure relating to natural capital. So say mining will score very high risk, but sort of low medium opportunity. And we've been able to use data sets like Encore and those from our data provider to refine and identify any sub-industries that we perhaps before weren't that exposed to nature risk, or even on the opposite case, specific sub-industries that we thought had very high exposure, but in actual terms, through this quantitative data, we found that what had been our qualitative assessment a few years ago wasn't quite correct. So in that sense, it's shaping through that sustainability lens our investment decisions. But of course, echoing what I was mentioning before, it's not quite at the stage that we're not at the level of maturity where day-to-day decisions are really being driven by this data.
Really interesting to hear how that's evolving over time. Jorgis, might come back to you for your reflections.
Sure, I might be a bit more provocative on this one. I think the question is saying, hey, is it a TNFD lovely and we can use it? In reality, if you open up the sectors, especially the sector-specific guidances, we're using Anchor, SASB. How many years was actually since that research was done? Not the publication, the research. We're talking almost about a decade since the group of academics undertook that. In comparison with climate, we have an ongoing, every at least 3 to 4 years update of scenarios, information. So I think there is an element of us as a group of concerned professionals to guide resource and prioritization in updating some of those underlying fundamentals, because there is a risk of those stop being relevant, right? So we're using some of the fundamental research that was undertaken almost a decade ago to find relevance to problems that are only surfacing now, such as data centers. So we're using, a 1930 spanner for a 2026 microchip. So I think it's important for us to think, yes, sure, TNFD frameworks can help present that complexity that we all run to, you're right, Valerie, in a simple way that our stakeholders can understand. I think that's great. But I think we should not forget that the underlying tables that relate particular biodiversity services to sector and geographies, it starts to become superseded, and we might start be losing information unless we guide researchers in where it's actually really needed, and those updating those fundamentals. So I would urge some attention to that.
And I think it's an area that's really exciting. I might bring us over to one last question, Rebecca, just in terms of the updates and research that are needed underway. We're seeing that come through in part through a lot of evolution in the technology that's available for data collection. Would be interested in your reflections around some of the innovations or tools that you found most useful.
Absolutely. So I think we have thought a little bit about the hierarchy of data, and I think that has some relevance here. So we do work with Soil Association to get information on the ground about our farms. We have kind of tools where we're getting data kind of directly with working with our relationship managers. But we do have to work with kind of external partners who have expertise in this space. And so I think some of that is thinking around the kind of what data have you got available and what hierarchy of data do you want to apply to these different data sets. I think there is a huge wealth of tools available for us. It is sometimes slightly overwhelming to understand which is most relevant for you. And so I think it's just back to that point of there are tools and data sets to suit most of us. It's understanding kind of, well, which are most relevant? What are we trying to do? Let's start somewhere. Maybe it starts small, build that understanding, build those capabilities, but driving impact where you can. So I think it's a rapidly changing environment which has massive kind of possibilities, but also complexities. And I think that is the theme that's coming out. But I think we can just back to that point of we can all start somewhere. There is enough to get started. And seeking help from others and kind of collaboration is going to be really key as we navigate all of these new tools, these new data sets, these new skills that are needed. But remembering that we're not starting from scratch either. We can learn from climate. We can draw on kind of other expertise and work together to kind of make progress here.
Well, that note on collaboration is a perfect place to leave it. I'll just thank you all so much for joining us today. Really appreciate your time as our panelists. I believe my colleague Hannah is going to drop some resources into the chat, but please don't hesitate to get in touch if you have questions about getting started with the TNFD. We'd welcome you signing up to join the TNFD UK consultation group. Stay up to date on webinars like these and other resources that we have available here at the GFI. And so just another thank you so much and wishing everyone endurance and energy for London Climate Action Week. And we'll hope to speak soon.
Thanks all.